It'll have the address up top of the home that the buyer is purchasing, seller info, buyer info. This is the most important part here is number 2. What it's saying is that the buyer is willing to increase their offer so that the net purchase price is blank higher than the net purchase price of a competing offer. So for example, if your buyer is saying, I'm willing to pay $200,000, but I'm willing to pay $1,000 above the highest competing offer, you would put $1,000 in here. And then it says up to a maximum of purchase price of, right? So this gives it a ceiling. So that way it's just not into infinity. If somebody offered $100,000 above asking, right? Your buyer's not committed to that. So then your buyer's going to say, I'm willing to pay $1,000 higher than the competing offer. So that way the net purchase price is $1,000 higher than maximum of purchase price of, and let's just say they're like, I will go up to $220. Oops. DocuSign does not like commas. So now this is saying a maximum purchase price of $220,000 at $1,000 increments. You're going to scroll down here because you have to select, the mortgage contingency is waived. The sale is not contingent upon mortgage financing. So that might be a cash buyer or a buyer that's very well qualified. Then you would check that. If the loan amount has to increase with the purchase price increase, so let's say the highest competing offer was $210,000. Well, the buyer's saying they're willing to pay $1,000 above the highest competing offer. So that would make it $211,000, but they need to get a mortgage to cover the difference, right? Then you would check here, the loan amount stated in the mortgage contingency box that's in the agreement of sale. We'll go back to that in a moment. And the loan to value ratio to remain the same. So if the bank says, yep, you're pre-approved for $300,000, but you got to put 20% down, even though they're only going to get $211,000 in this scenario, they still have to put 20% down because that's what their pre-approval said. So you're going to say, hey, I'm going to increase that mortgage contingency loan amount so that the loan to value ratio remains the same. You're going to click that box. Then you have the option of the first blank amount of difference between purchase price and the new purchase price will be paid in cash at settlement. So maybe their offer was for $200,000, but they have an extra $11,000 in cash that they're just going to pay at closing. So that way they don't have to mess with that mortgage contingency box. Then you'll also see the option here within blank days of the execution date of the agreement, buyer will deliver seller a written pre-approval letter from the letter identified in the mortgage contingency paragraph, basically with an amount equal to or greater than the new purchase price. So maybe their pre-approval was only for $200,000, but they know they can go up to $250,000 or $220,000, or in this case, $211,000. They'll put in here so many days of, hey, we're going to get that updated pre-approval letter to you to prove that we can do that. Quite honestly, in this market, I would just make sure you have that pre-approval letter at maximum amount that they're able to do to show that they're a strong buyer in this market. And then you don't have to worry about that, because as a listing agent, if your pre-approval letter says 200, but you're trying to say you could go up to 220, I would be hesitant and would make sure my seller realizes like, hey, we don't know for sure though, right, that they could go that high. So just a pro tip there. And then of course, if an appraisal contingency, if this price escalation is still contingent on it appraising that high, you would select that box here. And then your buyer would sign and date. If the escalation is accepted, so if there was a higher offer, let's say your offer was $200,000 and one was there for $210,000, like in my example, the seller then would have to fill in here that the purchase price of the agreement of sale is increased from $200,000 to $211,000 because the buyer said they would pay $1,000 higher than the highest competing offer. The seller has to show you a copy of that offer, okay, as proof You're not just taking their word for it. And then the seller would sign in date. And then I would save and close. Slow today. You'll see property address, seller's name, buyer's name. And then you'll see a couple different options here. The appraised value of the property must be equal to or higher than the purchase price. Or you can type in a minimum appraised value if the purchase price is not specified, whichever is less. You'll give a contingency period. You want to make sure that that contingency period ends before closing, but you do need to be realistic. In a seller's market or a high demand market, it takes appraisers a little bit more time. So don't do like a week or two. Sometimes it takes appraisers 2 weeks to get out there, then 2 weeks to get that appraisal in. So just make sure it lines up though with your closing date. Then of course, there's additional options. Option 1 says if the terms of paragraph 1 are satisfied, or if the appraisal is not completed within the contingency period, buyer accepts the property and agrees to terms. So what that means is if the contingency period was outside of closing and the lender didn't need that appraisal in, the buyer's just accepting it as is. Or if the appraisal comes back at purchase price or higher, or whatever minimum number that they indicate here, buyer says, yep, I'm going to move forward with my purchase. Option number 2, you would have the buyer initial next to one of these. If the terms of paragraph 1 are satisfied, or if the appraisal is not completed within the contingency period, buyer accepts the property and agrees to the terms of the release paragraph in the agreement of sales. So basically, let's say the appraised value came in under. So let's say the buyer wanted it to appraise at 200,000, but it came in at 190. The buyer has a couple options. They can terminate. They can buy the property at 200,000, but they have to provide additional funds at settlement. They can adjust the mortgage amount, or they can see if maybe they can adjust their loan to value ratio with their lender. But they do have the option to terminate, or you can actually negotiate to see if the seller will come down in price. But you would have your buyer select 1 or 2 of the options. If they decide to terminate, if the appraisal does not meet the minimum purchase price, the buyer does have to provide a copy of the appraisal report to seller. So they can't just say, hey, it didn't come in at appraised value, it came in $10,000 less, we're not buying it. They have to prove that by providing a copy of the appraisal. With that said, if the appraised value comes in at or above purchase price, the buyer does not have to provide a copy to the seller. So the seller does not have to know if the property appraised 10,000 above purchase price. It's only when it appraises less. So that is your appraisal contingency addendum. If you need it, make sure you hit save and close. If you need help on sending for electronic signature,